Okay.
Okay.
You-
Hello, everybody. Hello, everybody. My name is Anya. Welcome to Trading with Anya and Elvin. Today we are going to start from the beginning. Just from the beginning. Welcome to Forex trading.
Hey,
Okay.
thank you for having me. Thank you for having me.
Thank you for joining me. Thank you for joining me. So the first things first, we're going to talk about what is Forex. Forex is Forex. It stands for foreign exchange. And if anybody's ever been out of the country or traveled anywhere, most of the times you have to trade in your American dollars for whatever country currency you're going to. Well, what happens is sometimes you'll get a price at the airport, sometimes you'll get a different price at the hotel, sometimes you'll get a different price person to person, the gas station, etc. Wherever you change in the money, it's never going to be the same price. The reason for that is not that they're ripping you off. Well, partly it's not because they're ripping you off. Sometimes they are. But the main reason is because every day in the market, the money fluctuates. That means the money goes up and the money goes down. Okay, so Forex is the foreign exchange currency, but one of the things that I like to trade are indices and metals. Indices, that's your NASDAQ, that's your S&P 500, that's your US 30, that's your German 30, that's just all of the countries, like their top 100 to 500 companies all put into one index and traded. Those things move extremely fast. They're extremely volatile. You can make a lot of money, but you can also lose a lot of money. The reason that I like trading metals, gold, silver, is because it's wartime, right? Everybody knows that war is going on. And during wartime, from the beginning, since the early 1900s, people have always hoarded metals. So the price of metals always increases. So those are the two things that I like to trade, in addition to Bitcoin, because Bitcoin is so volatile. Sometimes it goes up, sometimes it goes down. All right. Any questions?
No questions.
All right. Awesome. Okay. So right before us, we have something called the NASDAQ 100. This is the platform that we're using is called TradingView. Okay. Everybody can see tradingview.com. This is where we're going to go. You're going to pay for a membership. The reason you're going to pay for a membership is because you're going to need indicators in order to trade. I know some teachers will teach you that you don't need indicators. You just need to look at the charts and draw the lines accordingly, figure out your highs, your lows, et cetera, et cetera. But I'm telling you that doing that will take forever. In addition to, the computer has it already figured out. So why not just let the computer work for us? It's much faster than we'll ever be. And it's going to pick up on things that we'll forget. Okay? So first things first. These things right here are called candles. All right. You can see the top of the candle is a green candle. A green candle means that we're in the buy. A red candle means that we're in a sell. Two easy colors. What does green mean? Green means buy. Red means sell. All right. So a candle has two components. A body. Let me make this a little bit bigger so you can understand what I'm saying. A body. This is this solid green part, and a wick. That's this part right here. So the top of this wick is where the price actually came to, right? And the body right here is actually where it closed. So we got four components of a candle: an open, a high, a low, and close, right? Okay. So we probably opened here, came all the way up to here, and then closed somewhere down here. So this candle will open again. All right. Now, the thing with the market is whatever is done on the left side has to be done on the right. And what I mean by that is this. You see price shot up, right? I'm sorry, whatever's done on the right, whatever's on the left side has to be on the right. Price shot up on the right side, right? So we have to correct that. So we have to go down on the other side and vice versa. Up, down, up, down, up, down. Price rarely shoots all the way up like this. It didn't shoot all the way up. As you can see, there was some breaks in price. We had some down, right? You have to retrace a little bit, go up, retrace, go up, etc. And the same thing on the way down. We didn't go completely down. We broke some in price. We went down some, came up those two, down some more, came up, down some more, came up. On the contrary, the way that we will always know that the continuing trend is either buying or selling is that we're going to continuously make higher highs or lower lows. What I mean by that is this. If you look at these candles here, this is what we call an uptrend. We had candles that kept making higher highs. That means they kept getting higher, right? This was a high. Then this is another high and another one and another one and so on and so forth. Candles just continue to rise, right? And the same
Yes.
thing on the inverse for the sell. Candles continue to make lower lows. You see the wicks of the candles continue to get lower and lower and lower and lower. Right. So we would know not to take a sell because everything continuously. We know not to take a buy because everything continuously is selling at that moment. Any questions? Am I going too fast?
No questions.